Ladies and gentlemen, welcome back to the channel. We need to talk about AMC stock and what's happening today. Now, the stock's actually doing pretty well. It's down less than 1%. You're over $4 per share. That is a major level that I want to watch throughout really the end of the day today. If you close over $4 per share, that tells you something big. So that's important to point out right off the bat. But we need to get into what's happening out there in the markets, because things are not pretty, guys, and things might not get prettier from here. If you have other stocks in your portfolio, then this is something you need to pay very close attention to. If you're only invested in AMC, I think you also need to pay very close attention, because what we have seen recently is AMC has actually been going higher at the same time the S&P and the broader markets have been going lower. Like, look at the S&P on a 30-minute chart. It's basically straight down the last couple of days. Straight down to the right. Look at AMC on a 30-minute chart. Well, it's basically straight up to the right. Kind of sideways trading action in here. And yesterday was very strong. So I think we need to talk about what's going on and how this could affect AMC. So let's go ahead and get into it. We're going to run through all of the data you need to know as well. Take a look at the FTDs, which are spiking yet again. Jeez, they don't stop. They literally do not stop. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys do want to come trade with us live in real time, linked down below in the description of this video for that one. So let's talk about what's going on in the broader market. So the broader markets are down today, and you can see the S&P is down about 0.25%. The Nasdaq's down a little bit more than that. Some individual stocks are getting absolutely destroyed. Nvidia's down over 2%. Tesla's down about 3%. Some of your big tech names specifically are not doing well today. Now, why is that? Well, as an analyst says, this week was a perfect storm as high interest rates and China fears bite. And that's basically what's been going on. There's been a lot of fears over in China that they're slowing down, they're going into recession, and things are going to get ugly over there, which is probably correct. At the same time, interest rates have been soaring over here domestically in the U.S. And you did get some data as well overnight tonight that was not necessarily encouraging. So what you got was the UK's retail sales month over month. They declined negative 1.2%. You were expecting a decline of 0.5%. So it came in like more than a standard deviation off of where it was supposed to be, or where the consensus was. The prior month was positive 0.6%. So you're really in a bad situation in Europe and in China. And the U.S. is kind of in limbo. There's a lot of uncertainty. I've said it before on this channel, and I think it's important to remember this. The markets can handle bad news. They cannot handle uncertainty. So when you're in this market of uncertainty and nobody knows what's going to happen, nobody knows if China's going to go into a deep recession, or if, their bubble's going to burst further. Nobody knows what's going to happen with Japan and interest rates with the new Fed president over there. Nobody knows how long Europe's going to be in a recession, or how bad that could potentially get. Nobody knows if the Fed's going to continue to raise rates, stop, cut rates. There's no consensus about literally anything out there. And then you add into the mix, we have the Jackson Hole Economic Symposium coming next week. That's in Jackson Hole, Wyoming. Last time that happened, last year in August, well, Jerome Powell killed the bear market rally. And subsequently, the next following 2 months, which again was in August, the next following 2 months, well, stocks fell and hit their lows in October. So the historical precedence of Jackson Hole alone is not great. Now, with that being said, it doesn't have to be the same way, and I don't really expect Jerome Powell is going to do the same thing. And what he did back here in August at the last Jackson Hole was say, basically, they'll do whatever they have to do to get inflation down. They're going to raise rates very aggressive until inflation is destroyed, whether that means we go into a recession or not. and cause stocks to fall. Well, you're going to get that coming Thursday and Friday of next week. But on Wednesday of next week, you're also going to have NVIDIA earnings. Now, NVIDIA earnings really ignited this market. And let's go ahead and pull NVIDIA up briefly. And all of this is important for AMC, and I'll explain that in just a moment. So NVIDIA earnings was back here the day after earnings was May 25th. What happened since May 25th? Well, the S&P was around 416. It hit a high of 460, and now it's at 435.93. Same thing with the NASDAQ, but on a larger scale. The markets took off with NVIDIA. So, NVIDIA earnings next week, I think this is probably the biggest negative thing that's going to be happening for the markets. Markets are expecting NVIDIA is going to have great earnings, in which they probably do, but the markets are expecting a really big guidance raise again from NVIDIA. And if that does not happen, anything less than that, even a slight guidance raise or keeping their full year guidance, is not going to be enough, and the stock's probably going to fall. That would be my estimate. Now, why is this important for AMC? Well, if the markets do fall, like I showed you with the 30-minute chart on the S&P and AMC, if the markets do fall, that likely means AMC stock can go higher because it squeezes out liquidity from this market. This drainage of liquidity has caused a lot of the most aggressive squeezes we have seen in history. This is not speculation, this is a reality. When stocks fall and hedge funds are allocated to stocks, bonds, short positions, the whole mix, derivatives. Well, when their stocks and their bonds fall, that's what's happening recently, it puts a lot of pressure on those short positions when those shorts start to go against them at the same time as their portfolios are falling. So it's not being used as a hedge at that point. It's being used as speculation, or one would say the hedge is going against them. So that's something to very much keep in the back of your mind as we go through this market, as things potentially get more turbulent in the next upcoming week. Now, let's get into the situation with AMC stock. Now, what I find very interesting, and kind of what we almost expected, is the FTD number is spiking yet again. It's been very high for a long time, for multiple weeks. That's why you've been on the threshold securities list, but it started to fall, and now it's starting to go higher again. I don't know if you guys can see that too well, but you've started to hit that bottom with FTDs around 6.8 million, and now you've started to increase at about 7.7 million FTDs, and that's because new data just came out, I believe, a day or two ago. So there's a lot of FTDs out there that need to still be covered on, and this does two things. One, obviously, when these FTDs get covered on or closed out on, it's buying pressure. It's basically hedge funds, institutions, market makers buying the stock, and that is bullish, obviously, because it's buying. But it also is reducing the amount of shares out there. So it's having a bullish effect on the stock and also an anti-dilutive effect on the stock, essentially reducing the amount of shares that are freely trading out there. And that could be a reason why AMC has been a little bit more kind of bullish recently after that 35% drop, because some FTDs have been closed out of. Now, most of them still need to be closed out of, and that's still going to be very bullish down the line when that does happen. Now, let's take a look at the option activity, because you are seeing a lot of calls going into the money as AMC stock is above $4 per share. Now, how long is this going to last? I don't know. You could close, well under $4 per share. But the time of recording this video, AMC stock is above $4 per share. So calls in the money is 144,000. Calls out the money 671,000. Puts in the money at 443,000 and puts out the money at 641,000. If we take a look at the option activity and the actual option chain for AMC, expiring this Friday, there's a lot of those puts at the $4 strike. You got about 205,000 You got 205,000 puts that are at that $4 put. So if those do expire out of the money, that's going to be a very much positive for AMC, especially heading into next week, because options work with a delay. So by the time things actually get settled, it could be Monday or Tuesday of next week, and that could make next week a little bit more bullish rather than not. So that's kind of the situation as far as FTDs and option activity. If we take a look at the Ortex data, live short interest of free float for AMC is at 28.29%. Looks like down 0.15% on the day. 146.09 million shares currently sold short. That is down 218,000 shares on the days today, so like a drop in the bucket. AMC stock is still on the threshold securities list. I think one of the big stories that has happened recently that is really bad news for hedge funds and institutions that are short in AMC is the cost to borrow fees. Cost to borrow average of 1,040%, cost to borrow max of 1,060%, cost to borrow minimum at 956.5%. These are rough numbers if you're short in AMC, let's just put it that way. Interactive Brokers short availability has 0 shares currently available with a cost to borrow fee of 879%. This shouldn't have happened after the catalyst has basically come and went for the shorts. There should not be this much demand and lack of availability to get hands on shares of AMC. But that's exactly what is happening. Now, the short score is sitting at 92. You have $591 million worth of short positions in AMC. The free float out on loan is almost 41%. So this is a weird kind of thing that is going on. The free float out on loan is going higher, and the short interest is very much lagging that. The free float out on loan is up 25% in the last 3 months, whereas the estimated short interest of free float is up 13% in the last 3 months. So if you do start to get the short interest going higher, especially on the next official report, it's probably a good leading indicator based on the free float out on loan. So short interest probably is going to go higher. Now, shares out on loan, that is up 25.15% within the last 3 months at 211 million shares. Days to cover, 7.35. Trailing 3-month cost to borrow fees are up 245% within the last 3 months at 313.25%. And utilization is sitting at 84.6, guys. So there you have it. The option activity on the day today, pretty negative. Not nearly as many options, though, or not as much of a dollar amount that's heading into AMC options. 50 orders totaling $7.15 million with a positive order value of 7%. 7% is actually a lot better than what we have seen recently. But that 7 million number is a lot lower than what we have seen recently. And for context, just so everyone is on the same page, positive order value being 7% means out of $100, $7 worth of that $100 went into bullish options. $93 went into bearish options. That's better than what you seen yesterday on $77 million, where $99 went into bearish options and $1 went into bullish options with that same analogy, guys. So that's kind of what is going on today. Bond yields are also something to watch. Seems like the last couple of days, bond yields have been skyrocketing higher, and AMC has also been rocketing higher. That's, again, likely due to this dynamic of the bond portfolios of hedge funds, as well as stock portfolios, are all doing pretty poorly. That's a bad situation if you are short in a stock and that stock is going higher, which is what AMC has done in the past couple of days. So that's going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.